Hello traders, Gary Wagner for Trending Markets. It's about 11 o'clock in Honolulu, 5 o'clock in New York, Wednesday, August 25th, and we've seen a tremendous rebound in the equities markets. What a one-day turnaround, considering yesterday's activity in which the market was trading higher throughout the entirety of the day, and then roughly an hour and a half into the close, just selling off. Utter chaos in the market, but that wasn't to be the case today. Today we had a strong market throughout, closing up near the highs, up over 600 points, 16,285. Now, when we look at this market in a couple of different ways, I draw your attention first to our weekly chart, because you can see that on this week, we'll blow this up, but you can see the tremendous low that it hit down here. And the fact is, it's still red. So we're still down for the week. Nothing like the prior week when we saw this market really sell off from about 17,500 to 16,500. This is that 1,000-point drop. We certainly have not made that up. But in terms of the week here, we started in terms of almost, I call it 16,500, and then moved below 15,500. So we saw another 1,000-point drop this week, but we've recouped or recovered most of it, considering that this amount of red, that's the difference between where it opened on Monday and where it's closed today, is ever so much coming together at this point, narrowing, that we could see a positive gain on the week without too much effort at all. Really, really interesting turnaround. Now, when we look at our daily chart, of course, you can really see the activity today. Tremendous move to the upside. And considering that we have seen this market drop 1, 2, 3, 4, 5, this was 6, it curtailed the market from a seventh day drop, trading day drop, and a tremendous recovery in the market. Something that is noteworthy, and if we get follow through over the next day or so, we could potentially have weathered the bear market, and we'll probably recommend going long the S&P 500s, mini S&P 500s. I think we'll have a good play here, and we could catch anywhere between 300 and 800 points on the trade itself. Looking at the mini S&Ps, though, the one thing that we want to be cautious of, that we want to be aware of, is I've put in a couple of the moving averages that traders tend to look at. This blue one is our 200-day moving average. The red one is a 50-day moving average. And you can see how much the market has dropped from that point. So we've got a considerable ways to go before we get back into a real territory in which we're looking at the market trading above that 200-day moving average, because that is such an important indicator to many traders. Now, in terms of other markets, currencies, we had a strong dollar today, up over 0.75%, 95.32. When we look at our weekly chart, it is closing higher on the week as of now, but you're also seeing a very, very similar candlestick, although the color is different from what we just looked at with the Dow. If you recall from the weekly candle in the Dow, we had this tremendously long line. This would be called a hammer in terms of a candlestick itself. If you have it after a defined downtrend, you have a body size that is close to the top range of the market, meaning no or very little upper wick, and then you have the lower wick, which is a minimum of 3 times the size of the body. That's really your definition of a hammer, and we certainly can say that that's very much like what we're looking at, either a hammer or a doji of sorts if the body size gets even narrower and narrower. So when we look at it in this way, the dollar, that's gotten strong. We've seen a real recovery in the dollar. We talked about a support level at 92.30, and that support level is absolutely held. So whether or not it's going to start really moving back up, we'll have to see over the next week or two, but we've certainly seen a dramatic recovery in the equities markets. We've seen a dramatic recovery in the US dollar. We have not seen that in crude light, which is good because we are short the market. If you recall from yesterday, we did have an update, but I said that it's probably going to be short-lived. Typically what we see in these markets is following dramatic declines of a couple of days. You'll get some short covering come into the market. You'll get a little bounce, but the bounce is short-lived at best. We're back below 39. We are at 38.89, off over 1% on the day, or about 42 cents per barrel. When we look at our daily chart, we're seeing exactly what we thought we would get when we talked about this yesterday, which was we got the bounce, and that's followed by a lower market today. The other thing that is, to me, a real good sign is we have our stop up at 40.20. We're not going to touch that right now. We've got a little bit of breathing room. We didn't have that, though, throughout the trading day today and yesterday as the market attempted to move back into that $40 per barrel territory, but was unable to do that. Our stop absolutely held. That's a good thing. And we've got the market trading back lower. Of course, we're short, I believe, at 41.87, market now at 38.60. And as I said initially when we put the trade on, 37.38 was my basic target. So I think that we do have a little bit more to go. We've got to stop in to protect us if we're wrong. This has been Gary Wagner wishing you, as always, good trading, and we'll talk to you tomorrow for another daily update and review. Bye-bye.